Ladies and gentlemen, good day and welcome to NIIT Ltd Q2 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Thadani, Managing Director and Vice Chairman of NIIT Ltd. Thank you, and over to you, sir.
Thank you. Good afternoon to all of you. Many thanks for joining this call, and thank you very much for your interest in NIIT Ltd. I would like to use this opportunity to provide an update on Q2 results for the financial year 24-25 or FY25 as we call it. I do want to inform you that I have with me the CEO of the company, Mr. Pankaj Jadhav, Mr. Sapnesh Lalla, the Non-Executive Director, the CFO, Mr. Sanjeev Bansal, as well as senior members of the leadership team. And we would be all very happy to have Mr. Pawar, our chairman, and Mr. Rajendran, joint managing director, who are also on this call, and we would like to together answer all your questions. Purpose was to provide you the update on Q2 results, as I said. Just want to set the backdrop. I do want to point out that over the last few quarters, while NIIT has seen a remarkable recovery from the impact of global economic uncertainty and the hiring freeze in IT sector, which has been on since Q3 of FY23, the company continues to remain in an investment cycle. Just to remind you that this recovery is based on the certain pivots that the company made. One was to start focusing on Tier 2 GSIs and GCCs. Second was to focus on the India enterprise story, where the India enterprises are modernizing themselves very, very fast. The third was to focus on advanced technology programs for large GSIs and therefore create a new niche for NIIT's positioning there. And the fourth was the BFSI sector, the strong growth that BFSI sector, especially private banks, are experiencing, and take advantage of their training needs and be prepared for them. I would say that this strategy has worked out well. The progress has been very good, and the recovery has led to large parts of NIIT's business, which are now profitable and are recording satisfactory business metrics. But overall, the overall NIIT business is still in an investment cycle, given there are a couple of businesses which require attention, and as we had clearly called out at the time of demerger and even before that, as we were transforming the company. We see a tremendous opportunity for growth ahead of us, and we have an ambitious growth plan to address this opportunity. We are investing in raising our revenue trajectory, and we want to do this sustainably and profitably. Some notable features this quarter, I just want to point out, though I had introduced him last time. We started the quarter with Mr. Pankaj Jadhav joining us as a Chief Executive Officer from July 1st. After he joined, he has also strengthened the management team and has given impetus to growing the business and adding some new offerings. He continued focus on AI and new advanced programs. We have incorporated generative AI in all our offerings. We launched a new initiative to help enterprises adopt generative AI, which has met with an encouraging response, and we created specialized offerings for senior technology working professionals, such as digital architects, product engineers, and product managers. So I would now hand you over to Pankaj, and I would request him to give an initial brief to you, after which we'll open it for Q&A. I must put a disclaimer first He has a very bad throat, but he insists that he would like to give the briefing himself. So we would listen him out, and if any parts are not easily audible to you, I'll repeat those for him on his behalf.
Thanks, Vijay. And yeah, just giving evidence of the bad throat. Good afternoon to all of you. Thank you for joining the call. As Vijay just mentioned, I joined as CEO from 1st of July. It's a pleasure to be back in the company and an exciting opportunity to lead the organization on its ambitious growth journey. On this earnings call, I shall be discussing the operating performance of the company for Q2 FY25 and also outline the plan for the rest of the year. Let's start with the Q2 financials. Revenue for Q2 was at 907 million. We were up 10% quarter-on-quarter and 11% year-on-year. EBITDA was at 21 million compared to negative 2 million for last quarter and 22 million for last year. Net other income for the quarter was rupees 188 million, which is predominantly contributed by treasury income. Profit after tax was 118 million versus PAT of 78 million last quarter and 106 million in Q2 last year. PAT is up 53% quarter-on-quarter and 11% year-on-year. EPS was rupees 0.9 per share in Q2 versus 0.6 in Q1 and 0.8 last year. On revenue, let's just add some color. This is the third successive quarter of year-on-year growth. As you know, business was impacted last year due to a virtual freeze in hiring by large IT services firms. Swift actions that the company took led to recovery in both technology as well as in banking and other segments. These actions have resulted in a sustainable and profitable growth trajectory for tech as well as for BFSI and others. These actions included, for tech programs specifically, we expanded coverage into GCCs and Tier 2 GSIs. We focused on advanced tech skills, training in them, example, cybersecurity, digital architects, and delivery managers. For BFSI and other programs, we increased penetration into large private banks. We now work with the top 4 private banks for training both early career and working professionals. We've broad-based offerings for India enterprise as well. This includes solutions for enterprise-wide adoption of GenAI. We have also experienced positive benefits of increased training spends by a few Tier 1 GSIs. Now, adding to the product mix or the outcomes from the product mix, revenue from BFSI and other programs is up 17% quarter-on-quarter and 19% year-on-year. Revenue from technology programs is up 6% QOQ and 7% YOY. BFSI and others mix versus technology was at 36:64. The same thing was 34:66 last year. The learner mix, the kind of people we've been training, revenue from early career programs was up 8% QOQ and 9% YOY. Revenue from working professional programs was up 12% QOQ and 14% YOY. The early career is to work pro mix was at 48:52, very similar to last year when it was 49:51. For early careers, BFSI and other programs have grown significantly, and similarly for work pros, technology programs are leading the growth. All-round growth is visible from growth in both the categories in terms of product mix as well as in categories in learner mix. Vijay, I think you take over.
Okay. So, yeah, sure. So, while he grabs some hot water, I'll continue with them. So on margins, as we mentioned, company is in the middle of investment cycle, and we are investing in raising our revenue trajectory, and we want to do this in a sustainable and profitable manner. So the margins for this are the net result of many products which are growing at a steady rate and have their cruising altitude margin or close to that. But there are a couple of them, especially, for example, the NIIT Digital part, which continues to remain in an investment phase. And after Pankaj is coming in, he has hastened the pace of development of that business to to get market ready where we can then invest for further growth. So a number of initiatives in Q2 were done to improve visibility. We did continue to gain traction in the specialized programs for digital architects, as we said a short while ago. This puts us in a very unique position with respect to technology leaders in the country. The added advantage is this also helps us because they are mentors to many other leaders, to many other technology professionals, and are also big employers for top tech talent in the country. The generative AI opportunity has been, NIIT has been an early mover on generative AI, and we would like to retain that advantage. We've created a unique set of offerings for Indian enterprises to enable adoption of generative AI. We have conducted special programs addressing senior management in over 30 companies for generative AI. In addition to that, we are also working or have rolled out a pilot for hybrid channels for learner acquisition and engagement in NIIT Digital. We are gearing up with a slew of offerings which will enable our students to pursue personalized learning paths with multiple new age career options. So all these investments are visible in the EBITDA margin, which is where I talked about the investment cycle. We continue to expand our reach with new customer additions across product lines and new innovative programs. During the quarter, the company ramped up execution of India-wide channel enablement for a large global consumer tech company. The company is also exploring opportunities for training in ER&D and other sectors concerning energy transition. We have met with some very encouraging results, but we'll be sharing those in the coming quarters. In terms of the quality of work that we do, it gives us a lot of pleasure in announcing that the company won a record 18 number of Brandon Hall Awards. Brandon Hall Awards in the learning industry are like the Oscars, and therefore to win Brandon Hall Awards in multiple categories indeed is a matter of great pride for each NIITian who has contributed to this success. Coming to the balance sheet metrics remain strong. Our overall days sales outstanding were 56 days compared to 53 days last year and 54 days last quarter. This is typically happening. The small changes happen depending on the quarter end billing, which happens, which smoothens itself out over the year. Capex for the quarter was at 97 million rupees, and that is consistent with the guidance and the plans that we had. Net cash at the end of the quarter was 7,201 million rupees, which is up from 7,185 million rupees in Q1 FY24. And it is versus 6,974 million last year, same time. Headcount, we continue to consolidate on our headcount, and we have reduced the headcount by 108 on a year-on-year basis and 17 on a quarter-on-quarter basis, and the headcount at the end of the quarter was 735 on full payroll of the company. The company has been focused on cost rationalization and conversion of costs from fixed to variable over the last year while continuing to invest in growth. I think we will continue on this trajectory for some more time given the volatility in the environment. At the same time, Pankaj's plan is also to add key salespeople and key other positions in the coming quarters, which will contribute to increase in headcount. On our guidance, success with GSIs, increased penetration across GCCs, India Enterprise, and BFSI are expected to continue to drive growth throughout the year. We are starting to see green shoots in IT hiring. We did experience some positive headcount addition after 6 to 7 quarters of decline in headcount as we saw from the IT majors or IT services majors quarterly results. While hiring volumes are rather low, as one would expect at this time, we see moderate pickup in the coming quarters. The company has been making investments to expand our capability and reach to execute some of these. Given that our footprint has expanded, with having added many more logos of Tier 2 GSIs as well as GCCs. We plan to accelerate investments in second half in both enterprise and consumer go-to-market strategies, leading to commensurate contribution to growth in the second half of the year. Given this, we continue to expect a sequential growth of over 10% quarter-on-quarter, and given the planned investments, Q3 will have low single-digit margin, as we have guided before. Green shoots in IT hiring and acceleration in coming quarters will contribute to our picking up momentum in subsequent quarters, and therefore we retain our guidance of full year revenue between 380 to 400 crores with a low single-digit margin for the full year. Just to complete, overall, we continue to see a large opportunity ahead of us and remain committed to our stated long-term goals. NIIT has been a strong and trusted brand. It has a differentiated, deep skilling methodology, which has now got proven again and again and gets recognized in the large number of orders that we get. And it's deliverable over a scalable delivery platform with proven outcomes. We have 200 plus active corporate partnerships and customers, with more than 90% of revenue coming from repeat customers. More than 30 OEM partnerships give us an early access to cutting-edge technologies. We have a strong balance sheet to invest in innovation and growth. And much of the irrationality that was prevailing in the market due to edtech startups willing to burn cash under funding pressure has died down, creating a healthier industry and competitive environment. Significant business transformation cycles are ahead as India is gearing up for a heady growth in coming times, as well as the global environment all pointing to India becoming a very big supplier center, both for services as well as for manufactured goods in times to come. This would create demand for specialized talent, which we are well poised for growth. So the focused entity that NIIT has now become enables us to be nimble and agile to address this market. So we continue to look for opportunities for both organic and inorganic growth. We have been examining a number of targets, and at an appropriate time, we would be sharing the progress whenever some distinctive progress happens. There is one item in the balance sheet which of notes to accounts, which I thought I would highlight just in case there is a question on that, and that is a capital reduction exercise which we did in one of the subsidiaries of NIIT Ltd in NIIT Mauritius. It's a small amount, however, at the same time, it's important to point out. Today, the board has also approved this capital reduction in our wholly owned subsidiary in Mauritius. This administrative action is part of an overall optimization and simplification exercise that the company had done pre-COVID. This is the last remaining leg of that action, which was pending for a while because of a number of statutory as well as other regulatory requirements. The subsidiary in Mauritius has stepped down subsidiaries further, which are profitable and generate cash. As NIIT Limited, we would like to access that cash, and I think the capital reduction will allow the company to access this cash available in subsidiaries more efficiently than ever before. There is no impact of this action on our standalone or consolidated financials, but since it was a material call that the board took, I thought it would be wise for me to share this with our shareholders as well as investor community in general. So I would like to stop our brief at this point of time and open it up for Q&A for all of us to participate in. Pankaj will join in answering questions whenever his voice permits. Otherwise, I will play his master's voice.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just trying to get your inputs on two elements. Firstly, when you say that the 380 to 400 crore kind of an outlook remain intact, so will that what could be the key driver for that? That is first part of the question. And also, it would be good if you could address the seasonality element of our business, given that last year was slightly different in terms of trend, in my understanding. So, what is the best way to look at the seasonality from quarter to quarter perspective in both the segments?
Okay. So what will contribute to 380 to 400 crores? We are already at this point of time at about 170 odd crores. 173 crores, right? And that gives us another 110 crores to reach or 107 crores to reach the 380 mark, and 127 crores to reach the 400 mark. The variables within that are not exactly to do with whether we have enough orders or not, but it is on the timing of execution of those orders. We have a strong pipeline as well as an order book, and there is a solid demand which is coming from, as we said, GCCs as well as select GSIs have already started consuming training. We also see banking and financial, so the banking recruitment continuing, and I think we have our capacity well loaded as far as that part is concerned. So the concern, if at all, will come from whether the GSIs that we are banking on to come back with the hiring, will that have a solid effect on that? And that, I think, is visible in the 380 to 400 range that we are looking at. If that starts happening faster, we may find ourselves on the upper end of the range. And that's why I think we gave the range, because I think the unknown part is to do with that. Both in our enterprise as well as BFSI, as well as, our stack route and technology training, as well as BFSI, I think we otherwise have, and also for Indian enterprises, a lot of our order book is already in. So to that extent, it's an execution play. Answering your second question, at this point of time, seasonality tends to get clouded because we are on a steep recovery. Otherwise, quarter 3 should be a lower quarter, because quarter 3 is typically a quarter where enterprises don't spend much because of holiday season. Students don't spend much because either they are in their, again, because of the holidays and festive season, or they are just got into newer jobs, so they have not yet started consuming training. So quarter 3 traditionally is the low quarter for us, when our early career part is very strong. But in this case, since we are on a recovery phase, I think we would see quarter-on-quarter growth. That's what we are talking about in this, the 10% quarter-on-quarter growth, which typically in a quarter 3 would be difficult to imagine. All this is happening is off-season, very much like nowadays seasons have lost their meaning. If you see the rains in Bombay and in Bangalore at this time of the year, I think is pointing to. I think economy is also going through a similar environment. Hopefully not permanently, but in a temporary way. So I think seasonality Finally, quarter one and quarter two should normally be high periods for us. Quarter three tends to be low. Quarter four shows a slight recovery, but in that, BFSI tends to consume less. That's our overall pattern I'm talking about. But this year, I think those patterns are slightly disturbed, and hopefully for our benefit.
Vijay, just, of course, this is helpful. Just trying to understand it slightly better, because if you see, looking at your own comment that you're not pretty confident in terms of GSI potentially spending in Q3, and then you're also saying Q3 could be ideally looked at 10%, which would mean at the upper band you would require 30% growth QOQ to achieve that task, or maybe 8-9% growth on the lower band. So lower band I can understand, but you still want to retain the top end of the band, because that would imply 30% growth on top of 10% growth. And as you said, the seasonality at this point is not in our favor in H2. So if we have demonstrated 10% growth sequentially in the last two quarters, what makes us think that that same momentum should continue?
Yeah, so I think this time the growth trajectories that we have pointed out, these trajectories are based on what we have in our hand, rather than banking on historic reasons for growth in times to come. So if the quarter-on-quarter growth in the third quarter, for example, is on a higher side, then only there is a likelihood that you will get the fourth quarter in the 380-400 range. Otherwise, I mean, on the upper side of the range. You are absolutely right. In quarter four, there are a few things which no season can take care of, which is that financial years have to end, and BFSI banks' attention does get focused on making sure that they strengthen their balance sheet. So quarter three does have a role to play, an important role to play.
Right. That's it from my side. I'll join back in the queue.
Thanks.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We'll take our next question from the line of Ganesh Shetty, an individual investor. Please go ahead.
So congratulations for decent set of numbers in a very tough microeconomic conditions. Recently you have launched GNIIT program again, and can you please throw some light on this, the acceptance and the way ahead for this program?
Okay. Thank you very much. Ganeshji, you have been very kind with your words and your encouragement. Thank you very much. I also noticed that you keep a very close watch on the company. You noticed I did not talk about the GNIIT program in and the reason for that is that we are actually right now testing something under the radar, not yet for full commercial launch. But yes, there is work going on. And I think the basic issue which is coming out of is follows. People get into higher education, and higher education puts you in a particular tunnel, one tunnel or the other. Of course, with the new education policy, you can switch tunnels, but nevertheless, you still remain within a tunnel. You can't create your own tunnel. And our purpose was to make sure that we create a program which offers people the flexibility to have multiple career options. Because as we have seen, youngsters more than ever are wanting to have multiple career options and would like to try out different things. There is also an opportunity for youngsters, wherever they are studying, to be gig entrepreneurs. And many of them require skills in that area. Putting all this in mind, we are trying to configure together a program which can be akin to a GNIIT program and would enable people to realize their full potential by trying out multiple things, gaining skills on the way, and have therefore multiple career options, including the option that they and their parents have converged on. It will also give them an opportunity to to take advantage of their college education